Welcome to the Deep Dive, your shortcut to truly understanding what's moving the needle. Today, we're cutting through the noise from Phreesia Inc's latest earnings call. This covered their second fiscal quarter results ending July 31st, 2025. We've got a stack of insights here.
Yeah, and our mission today is really to break down the key financials, unpack a pretty significant strategic acquisition they announced, and explore how new tech is shaping their future. This isn't just about reporting numbers, right? It's about what they actually mean.
What they mean for healthcare tech, market sentiment, and what it means for you listening. All right, let's jump straight into the headline numbers from Phreesia's Q2. They announced what looked like a substantial beat across key metrics. What was the biggest thing that jumped out at you first?
Well, the biggest headline, no question, was their first ever net income positive quarter. That's huge for them. They reported GAAP EPS, its generally accepted accounting principles, earnings per share of 0.01 cents.
A penny per share, but positive.
Exactly, and that was a significant positive surprise. Consensus estimates had actually predicted a loss. So, yeah, it's a fundamental shift.
That is a huge milestone. Okay, what about the top line? Revenue. Other profitability stuff.
Absolutely. Revenue came in strong, $117.3 million. That's a solid 15% year-over-year increase, and it comfortably beat expectations. And beyond revenue, adjusted EBITDA, that key measure of operational profit, saw a really impressive surge.
How much?
It hit $22.1 million. That's way up from $6.5 million the prior year.
Wow.
Yeah, it really shows strong operating leverage. They're getting more profit from new revenue and a healthy 19% margin there. Plus, strong free cash flow, too. $9.6 million. That's their fourth quarter in a row of positive operating cash flow. Very important for financial health.
Okay, so on paper, those numbers look great. GAAP profit, revenue beat, surging EBITDA, consistent cash flow. Sounds like a fantastic report. Yet, the market's immediate reaction was, well, a bit of a roller coaster, wasn't it? We saw that initial modest uptick after hours, but then things got volatile. The stock actually saw a significant decline later that evening. This difference between strong results and a shaky market reaction, that tells an interesting story. What do you think was going on there?
That is the million-dollar question, isn't it? I mean, hitting net income positive for the first time is a major milestone. It really signals that shift towards, durable, profitable growth. Better capital stewardship. It's not just a footnote. It's like Phreesia graduated from promising growth story to potentially a proven self-sustaining business.
All right, changes the risk profile perception.
Exactly. For institutional investors, that can flip the script. But that market skepticism, especially the later dip, often points to something else maybe lurking under the surface, something the market was maybe scrutinizing in the details or the other announcements.
Makes sense. Okay, so let's dive deeper into that operational strength. What metrics really back up this shift towards durable growth? We often look at clients, right?
Indeed. We saw average healthcare services clients, AHSCs, grow a healthy 7% year over year. They're at 4,467 now. And even better, revenue per AHSC also went up 7%. To $26,249.
So getting more clients and more revenue from each one.
Precisely. These aren't just vanity metrics. They show deeper penetration within their client workflows. Their network solutions segment that connects life sciences with patients and providers that showed really robust growth, up 25% year over year. Yeah. And patient payment volume through their PayFac solution, their payment facilitator service, hit about $1.25 billion. Around 82% of clients are using that system now.
Okay.
So, yeah, strong platform leverage, increased stickiness. The core business looks solid.
Okay, that paints a clear picture. Strong operational flywheel. But beyond organic growth and efficiency, the call also had that major strategic announcement. I imagine that grabbed a lot of attention. What was the big news on the M&A front?
Right. The significant news was Phreesia's definitive agreement to acquire AccessOne for $160 million in cash.
Okay.
Yeah, it's a big move. And it speaks directly to a critical challenge in healthcare today.
So tell us more about AccessOne 1. What do they actually do? And how does this fit into Phreesia's strategy?
AccessOne is a recognized market leader in healthcare provider financing. Basically, they help patients pay for care over time through flexible payment plans.
Okay. Like financing options for medical bills.
Exactly. Which, in turn, helps the providers improve their collections. Phreesia frames this as a natural extension of their existing payment strategy. It directly tackles that growing gap in patient care related to affordability.
That makes a lot of sense.
Think about it, right? A patient might delay care because of a surprise deductible. AccessOne helps make that care financially accessible. The deal should close Q3 or early Q4 of fiscal 26.
That's a powerful strategic fit, especially with affordability being such a big issue. But the immediate question for investors, particularly with patient financing, is always, who holds the risk?
That's absolutely crucial. And Phreesia was very explicit about this. They are not the risk bearer for these patient payment extensions.
That's important.
Very. That risk is shared between AccessOne's longstanding partner, PNC Bank, and the healthcare provider itself. So Phreesia isn't taking on significant credit risk here. And post-close, AccessOne is expected to add about $35 million in annualized revenue and $11 million in annualized adjusted EBITDA.
So it adds profitable growth right away.
Exactly. Strengthens the financials and adds a profitable stream.
That risk detail is vital. Okay, let's unpack another big piece they highlighted. TAM expansion, total addressable market. What does this deal and other things mean for Phreesia's overall opportunity?
This is where the long-term vision really snaps into focus. The AccessOne acquisition alone is expected to expand their payment solutions TAM, total addressable market, by about $6 billion.
$6 billion just from that deal.
Just from that. But wait, there's more. They also increased their network solutions TAM by another $6 billion.
Okay.
They're anticipating drawing from a larger pool of life sciences marketing dollars as their products become even more, embedded across their network. So you combine those, and this massive expansion is projected to increase Phreesia's total TAM from roughly $10 billion to a staggering $24 billion.
Oh, from 10 to 24 billion. That's more than double.
Yeah. It significantly broadens their long-term growth runway, a much, much larger pond to fish in now.
Okay, that tells you they're thinking really big. Shifting gears slightly, the call also touched on AI developments. What are they doing there?
Right. Phreesia's making significant strides in AI. They highlighted a new voice AI product. They said it's already getting phenomenal feedback from providers. And this isn't just like a concept. It's a tool that's proving highly effective in real-world healthcare settings.
Can you give an example? How is this voice AI actually being used?
Sure. Imagine a busy doctor's office, right? This voice AI is helping with call center operations, handling patient prescription refills, even streamlining appointment booking.
So taking some administrative load off the staff.
Yeah, exactly. Frees them up for more complex stuff, improves the patient experience. What's also interesting is their monetization approach. They stressed building valuable products first,
Right.
even if they offer new features at no initial direct cost. They believe monetization naturally follows once the value is clear. And crucially, they confirmed these AI products are already being actively used by clients, like right now. And they are being monetized today.
Okay, that's a powerful statement. Not just developing, but actively using and monetizing already. And management used strong language too, calling the AI market in healthcare massive. Sounds like they see this as a major long-term revenue driver.
It absolutely sounds like it. They're not just dipping a toe in. They seem fully committed to AI transforming healthcare ops.
So with all this happening, the acquisition, the AI push, the core growth, how did Phreesia update its financial outlook for the full fiscal year 2026?
Okay, so for the full fiscal year 26, they're actually maintaining their revenue outlook for now. That's in the range of $472 million to $482 million. They did say an update is expected after the AccessOne deal closes, which makes sense.
Okay, holding revenue guidance pending the deal close. What about profitability?
Right. This is where it gets interesting. They raised their adjusted EBITDA outlook for FY26. The new range is $87 million to $92 million.
So up $2 million at both ends of the previous range.
Exactly.
So even with revenue guidance pending, they're already raising the profit outlook. That signals real confidence in their efficiency, doesn't it?
Precisely. Strong confidence in operational efficiency, that operating leverage we talked about, and, disciplined cost management. They're squeezing more profit from their current base. They also reiterated expectations for AHSCs to hit about 4,500 and for total revenue per AHSC to keep increasing compared to FY25, reinforces that operational strength.
Let's zoom out for a second. Phreesia operates in this really dynamic healthcare landscape. What broader macro trends are influencing their strategy?
Yeah, the macro environment is definitely a double-edged sword. On the one hand, we've seen hospital operating margins improve into mid-2025.
Okay.
That generally helps healthcare IT spending. Healthier hospitals are more likely to invest in tech, like Phreesia's.
So hospitals having more money is a tailwind. What's the other side of that sword?
The other side, and it's a big persistent challenge, is patient affordability pressures. Rising deductibles, out-of-pocket costs.
Right, people struggling to pay their share.
Exactly. And if a patient can't afford their bill, it hits the provider's collections hard. This trend is exactly why the AccessOne acquisition makes so much strategic sense. Flexible patient financing is becoming critical for providers. It helps them improve collections while maintaining patient trust and ensuring people get the care they need.
It's a win-win, potentially.
Yeah, patients get care, providers get paid. Phreesia is positioning itself right in the middle of solving that problem.
Okay, so let's try to put this all together. We had what you called a clean quarter, a GAAP profit beat, raised EBITDA guidance, major strategic moves. Yet that initial market reaction was complex, maybe even negative later on.
Right, the volatility, especially that later after-hours dip, it suggests investors were weighing several things. Core performance was undeniably strong, sure, but concerns likely centered on, let's call it acquisition indigestion, the $160 million cash outlay for AccessOne, the bridge loan financing.
Which adds debt, at least temporarily.
Right, and of course, just the inherent integration challenges and risks with any large M&A deal, plus maybe holding the revenue guidance, even pending the close, gave some investors pause.
Scrutinizing future impact, potential dilution of focus.
Exactly. It's classic market behavior reacting not just to today's results, but to perceived future risks and distractions, even if the long-term logic seems sound.
But connecting this to the bigger picture, Phreesia has a history of pretty strong returns, often beating the healthcare sector and broader markets. They hit fresh 52-week highs just before this call. So is the market's immediate skepticism maybe overlooking significant long-term value here?
That's the critical question, and it's one you listening should definitely think about. If they successfully integrate AccessOne, it could really expand Phreesia's role into broader revenue cycle management, RCM.
Making them even more essential to providers.
Potentially, yes. Boosting that average revenue per user, increasing customer stickiness. And then there's the AI piece, the ongoing development and monetization of things like voice AI. That's a compelling growth opportunity. These factors could be significant catalysts for durable, profitable growth down the road. Maybe the market's initial reaction was a bit short-sighted. It's about seeing the chess moves for the future.
All right, now for something a little different. This is not financial advice. Our segment where we throw some outrageous but plausible trade ideas, based purely on what we've discussed, strictly for educational fun, of course. Imagine you're pitching these to an investment committee, a skeptical one.
Okay, let's dive in. The market clearly had that knee-jerk, almost Pavlovian response to the M&A news, right? Punished the stock despite a stellar print, actual profitability. It's like some algorithms just see acquisition and hit sell without digging into the strategy or the risk profile. Trade idea one, the buy the dip, sell the story, arbitrage. The play, look, the stock got beaten down post-earnings. Reasons feel more emotional than fundamental. So that creates an immediate entry point if you believe in the long-term story. And the kicker is the AccessOne deal looks fundamentally sound. It's a non-recourse payment solution addressing a huge pain point, affordability. Phreesia explicitly said they're not the risk bearer. Crucial detail may be missed in the noise.
Okay, so lean long based on fundamentals overcoming short-term reaction.
Right. Expectation is the market eventually digests AccessOne, sees the TAM expansion, values the low-risk revenue. The outrageous twist. Okay, so while we're long, we could maybe simultaneously initiate a covered call strategy, sell some short-dated, slightly out-of-the-money calls. Why?
To generate income while you wait, capture volatility premium?
Exactly. Volatility might persist short-term. We capture premium from that elevated implied volatility, essentially getting paid to wait for the market to appreciate the story. If the stock bounces hard, great. If it doesn't right away, we collected premium. If it dips more, we potentially have more dry powder, and the calls might expire worthless or become cheaper to buy back.
Leveraging short-term angst for long-term gain, harvesting premium. Nice.
Trade idea two. The AI growth multiplier leveraged long. The play. Okay, forget AccessOne noise for a second. What's really exciting and maybe severely underappreciated is that burgeoning monetized AI suite, voice AI especially. Management used words like game-changing, phenomenal feedback. They said it's actively being used, and we are monetizing them today. This isn't theory, it's happening now.
The long-term upside from embedding that deeper new revenue streams.
It's massive. They've unlocked a powerful new growth vector, the outrageous twist. We go long, sure, but for maximum leverage on this AI conviction, we could look at something like a LAP call spread, far out on the curve.
Okay, explain that. Long-term options.
Yeah, long-dated options. Maybe buy deep in the money calls to get good delta exposure, but minimize the time decay and simultaneously sell further out of the money calls in the same expiry to help finance the purchase.
So reducing the net cost for a leveraged bet.
Precisely. A highly leveraged bet on AI-driven revenue acceleration at a potentially reduced net cost. We're betting the market, once it gets past the AccessOne digestion, applies a significantly higher multiple to Phreesia's AI-powered future, making this a potentially disproportionately rewarding trade.
Not just buying the future, building a financial catapult for it. Got it. And that wraps up our deep dive into Phreesia Inc's latest earnings call. We've seen a company hit a really significant profitability milestone, make a bold strategic move, and double down on cutting-edge AI.
Yeah, the initial market reaction was certainly a point of discussion, but the underlying story TAM expansion, disciplined growth, tech innovation that remains pretty compelling. It definitely gives you a lot to consider as you think about how these developments might play out in healthcare tech.
Remember, this deep dive, it's all about giving you the insights to form your own informed opinions. We really encourage you to continue your own exploration based on what we've shared today. What stands out to you after hearing all this?
We hope this discussion provided some valuable, aha moments, some clarity on what was a pretty complex earnings report, hopefully helped cut through some noise.
Thank you for joining us on the deep dive. We look forward to our next conversation.